Well, as we mentioned, it's a very busy morning for reports, and Ori Mann is a financial analyst and former investment banker for Barclays Capital, who's joining us this morning from Fort Lauderdale, Florida, to break some of these numbers down. Michael Toporek is a managing general partner with the private equity firm Brookstone Partners, here with me in New York to break down all the numbers as well. Good morning, gentlemen. Good to see you guys. Michael, let's first start here on the Ford numbers. It looks like a much better than expected number. Good surprise?
Those are excellent numbers, and they were really driven by the fact that they picked up about 200 basis points in market share, and also their incentives per car dropped by about $1,000, about $1,300 per car. So if you were tracking those numbers over the quarter, this was not completely surprising, but the biggest surprise is the cash burn. We were really anticipating close to $19.3 billion on the balance sheet, and they showed up with about a couple billion, almost more than that, which is really outstanding.
And just put that in context for people, what was the cash burn rate in the first quarter or the fourth quarter of last year, so just people can put this in context?
I don't know offhand, but significantly larger than that. And they are, the idea is the cash burn is getting smaller and smaller, as Mulayali said, to the point where a small improvement in the environment will get them to cash flow positive. And leaving aside EPS, which is an accounting measure, net, cash is cash. And that's the best news out of this report.
Yeah, I mean, Ori, I seem to remember that at one point it was, I don't know, burn rates, I don't know if it was Ford or GM, but we saw burn rates as high as like $6 billion in a quarter. I mean, some of the numbers were staggering. What does this Ford number say to you?
You know, I think it's great news for Ford. I still think the auto sector is a really bad place to be. I also think that the U.S. auto sector is a worse place to be. Ford is clearly better than GM, but you know, I wouldn't be putting my money here. I like to call the executives at Ford the Botox executives, because they're always frowning. I mean, you know, these losses, I don't see the end to them, and they have a lot of frowns in their face, so they need Botox. But you know, so as far as I'm concerned, you know, I would get out of Ford. They've really ridden this PR with, you know, not taking the bailout money. That's been great for them. It's been a great story. Now they're coming out with some new stories, like how they're going to, you know, have this new powertrain for their cars. It's a great story if you're a mechanic, but not necessarily an investor. You know, I'm not a fan of Ford here. I wouldn't be a buyer.
Okay, we did see Wyeth come out. They reported what looks like really strong numbers. This on the heels of Merck and Pfizer. We have Bristol Myers coming out, reporting earnings later this morning. They also made an acquisition today, just about $2.5 billion acquisition. What do you make of the healthcare sector, the pharmaceuticals? Are they doing well?
They're doing well, but also what drove Wyeth, as well as many of the numbers we're seeing and we're going to see, is cost. They've got Project Impact at Wyeth, which they're executing on and just wringing cost out of the business. And that's what I think drove a significant portion of their profitability and will continue to drive the profitability in the sector.
It's something we're seeing in all the earnings, Ori. It's a difference between the top line versus the bottom line. Is it growth or is it cost cutting?
You know, I think that, yeah, I agree, absolutely. Most of the growth here for EPS will come from cost cutting, and, you know, there's this talk about Pfizer and Wyeth, whatnot, with the merger, and, you know, I believe, correct me if I'm wrong, I think on Monday the shareholders of Wyeth approved the potential merger between the two companies.
Yes.
And, you know, the reason why, you know, Pfizer is interested in a company like Wyeth is they have these innovative biotech, you know, drugs, and Pfizer has been losing exclusivity on so many drugs over the last year. I mean, look at the drugs they're losing. They're, you know, Zyrtec, Compotasar, Norvasys, Lipitor. All of these drugs, you know, have been losing exclusivity, so they need to make it up, you know, so they're going to buy a company like Wyeth. I don't think, though, at the end of the day, that the combination is good. I think you're going to see a larger, slower company between the two of them combined.
Interesting, because that's in part why Bristol Myers is making the acquisition today as well. It's all these patent expirations. Everybody's trying to get into the biotech field. Let's switch gears once again. Let's get to Philip Morris International. Also appears as though they had a better than expected number. We'll get McDonald's in just about a half hour. Talk to me about the consumer staples.
I think the Philip Morris number was probably driven by, again, cost savings as a result of their acquisition of U.S. Tobacco. And I think that in terms of them specifically, there are different tax things playing around with some numbers in terms of tobacco taxes, and those their customers are starting to reorder again. So I think they had the benefit of that in this particular quarter.
It's a good point you bring up, because, or something that we're seeing in a lot of states right now is proposals not only on tobacco taxes but also on soda taxes, that we're going to start to see it on those consumer staples or those products that we use every single day. That could clearly put a pinch into earnings.
Yeah, no, I think that what you're looking at is everyone's awaiting to see what the implications are for these new federal taxes on cigarettes. A lot of analysts are saying, people will be buying less cigarettes because of these higher taxes. In my opinion, like everybody else, the economy and the financial situation is stressing people out. And smokers, when they're stressed out, they smoke more. So I think it'll be pretty much a wash in that sense. I don't see a lot of drop in demand for cigarettes. If you are going to be a buyer of cigarette companies, which I'm not, I would look at something that's a little bit more international, so you get that exposure, like British American Tobacco. They're in 180 companies as opposed to Philip Morris, which is in about 160. And so I like them more if you're a buyer.
Okay, I'm looking, guys, at the list of earnings that have come out this morning, and so far, from what I can tell, it looks like the only one that probably missed is Hershey's. But I want you guys to look ahead for a moment, because I'm looking at the list of companies due to report. McDonald's comes out in about 45 minutes, but you have Amazon, you have American Express, you have Microsoft after the bell. Which earnings do you guys believe will be the most crucial that we got to pay the most attention to? Michael, you're first.
Microsoft most easily. It's the broadest based company that can give you the best read on the economy.
Hold on one second, Michael. We've got some breaking news. I want to go back to Jeff Locke in Dearborn, Michigan. It's on General Motors.
Indeed, Alexis, we may be at Ford here today, but some news from General Motors will be announced later today by the company. They are naming a new head of their Cadillac division. It is a vehicle designer, and there's a couple interesting things about this. Man's name is Brian Nesbitt. He is known for his design work. He will also be reporting to Bob Lutz, Alexis, your good friend, which is an interesting way for this to kind of shake out.
All right,
he
Jeff.
loves this stuff.
Thank you so much.
Thanks,
we appreciate it. Just before we wrap up, so Michael, the one I need to watch today is Microsoft.
Clearly.
Okay, Ori, do you agree? Is it Microsoft or is it another company?
Microsoft is key, but I'd also watch UPS. I mean, UPS and FedEx, these are bellwethers for the general economy because not only do they deal with shipments, they deal with customer orders, and you can see by what's going on at these companies where the general condition of the world economy is. So I would be watching UPS as well. They've recently negotiated with their pilots in June, saving $90 million over 3 years. So it's a good company, in my opinion, to be invested in. The big story going forward for UPS is whether this new piece of legislation is going to pass, putting FedEx employees in the same sort of position with unions that UPS employees are in. So UPS is hoping that the FedEx employees will be under the same sort of scrutiny under the National Labor Relations Act.
All right, very interesting, guys. I thank you very much. UPS, guys, by the way, is coming out at 7:45. Microsoft after the bell. Terrific conversation. Appreciate it. Let's go overseas, check in with Ashley Webster, get a check of the overseas markets. Ashley?
Yeah, good morning, Alexis. Good morning, everybody.